Talk more about today's big tech rally and bring in our friend Julian Emanuel, BTIG's chief equity and derivative strategist. Julian, good to see you. Are you just sticking by your S&P 4,000 year-end price target?
We are. What you have to do is step back for a moment and just acknowledge the fact that, as is definitely the case in the latter stages of many bull markets, we are seeing a greater speculative element. And with that comes more volatility. That's what we've experienced the last week. In our view, this volatility could continue for a little bit longer in the near term, but ultimately it is a buying opportunity. We do think 4,000 is very doable for a lot of the reasons that the panel has just spoken about. But essentially what you need to do is to recognize that emotions are running very, very high right now. And that means things may get misaligned to the upside, as we've seen in a lot of these speculative names in the last week or two, as well as some things to the downside. And rather than trying to go with the flow, those are opportunities to add returns to your portfolio and take profits when reasonable in a very balanced, less emotional way, which is how good investors really do run money over the course of years.
Yeah, and it feels like no matter what we go through, right, whatever the thing may be, whether it's GameStop or Reddit, liquidity concerns, new virus strain concerns, whatever it may be, that ultimately the Fed, that tailwind, trillions of dollars, $7 trillion balance sheet, QE basically still on the books, all of them in unison. Rates aren't going higher likely for years. Does that supersede, only from a market's perspective, of course, everything else, Julian?
Brian, it's never as simple as don't fight the Fed, okay? We like to think that's the case, but it isn't, because, clearly there was a time last year the Fed was still accommodative, and obviously we had the dislocations that we saw in February and March. Granted, the Fed came out and was very in front with extra liquidity, and as you mentioned, that's not going away. But the fact is that we have earnings growth. We have the potential for a significant reacceleration in the economy. The vaccines are there, and to us, that is ultimately going to be a recipe for higher stock prices. And we do actually think that the value trade is likely to reassert itself in the days ahead, based on a stronger economy in the second half of the year in particular.
So, Julian, it's Pete Najarian. Quick question for you. So what specifically sector-wise do you look to that's going to push us up to the levels that you're talking about for the S&P 500?
We really like financials a lot here, Pete. Basically, what we see is the Fed staying very, very subdued at the front end of the yield curve. But if you look, part of this narrative of the economic reopening and the likely acceleration in growth and potentially in earnings really bodes well for the idea that longer end yields, as has been the case the last several months, will continue to creep higher. An upwardly sloping yield curve is very positive for financials whose valuations in aggregate are very reasonable.
Julian Emanuel, BTIG. Julian, we appreciate your views. Sticking by that 4,000 S&P year-end price target. Have a good one, Julian. Thank you very much.
Thank you.
Shepard Smith here. Thanks for watching CNBC on YouTube.